Hey everyone, Plug Power stock is down 68% in 2023. But does that mean it's a buy for 2024? That's the question I'm going to answer in this video by looking at what happened with Plug Power in 2023 and then taking a longer term picture and looking at what's been going on with Plug Power over the last several years. And then I'll look at its valuation to answer if I think that Plug Power stock is a buy in 2024. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So 2023 has been an absolutely miserable year for Plug Power. The management team saying that overall financial performance has been negatively impacted by unprecedented supply chain challenges in the hydrogen network in North America. But they believe that it's a transitory issue and they think that next year things are going to get better, especially when they ramp up production in their Georgia green hydrogen facility, which, oh, by the way, has been delayed several times before, so it's no certainty that it will be up and online in 2024 either. Still, management is hopeful that the green hydrogen plant is nearing a major milestone. They're completing the final step of the commissioning process for the liquefiers and the cold box. At this point, I think Plug Power investors just want to see the company say that it's done, it's ready, it's producing, and no more of these checks and points and highlights and forecasts, and just tell us when it's ready to go already, because they've told investors so often that, look, when it comes online, it's going to help us bring down our gross profit loss, it's going to do this and it's going to do that, and we're almost there, and we hit this next step and we hit that next step, and we're doing this and we're doing that. And then they say, oh, where we had to delay and we had to delay and we had to delay and pause and this. And so investors are fed up at this point, especially as the stock price has gone so much lower from its peak valuation. Investors are now just saying, we're exhausted with the news of updates and delays. We just want to hear you say that it's ready and it's producing. So even with that Georgia plant coming online, it's not going to be enough to satisfy all of Plug Power's energy needs. Now, let me show you an interesting thing about the business, and one of the things that has caused me to not like this business at all. For the several years that I've been following Plug Power stock, I've told investors to avoid, do not buy, because the business model, the foundation, is just on such unsustainable footing. And let me show you precisely what I mean. So Plug Power, in their revenue for power purchase agreements, generated let's say 20 million in revenue and about 19 million in revenue from fuel delivered to customers and related equipment, right? But look at how much it cost them. This is the cost of revenue. For the power purchase agreements, 56.98 million, and for fuel delivered to customers, 59 million in the most recent quarter. So roughly 3 times as much as what they're charging customers. That's how much the fuel has cost Plug Power. So they're getting this product that, let's say, cost them, let's just use simpler numbers, $60, and they're selling it for $20. That's essentially the business right now for Plug Power. They're getting product that costs them 60 and they're selling for 20. And so it's understandable to see that the company keeps losing money on the bottom line. And I'll show you a longer term picture, how it has made little progress in improving the profitability, how it's just burning through billions of dollars, and there is no improvement. Now, maybe when they bring up online this Georgia power plant, that will reduce their cost for power, right? That will reduce their cost for fuel, because they're going to be producing it and they're not going to be buying it from third-party providers. And so they can produce, then now they're projecting that they can produce at a lower price. There is no guarantee that they will be able to produce at a lower price. And still, it's a lot of forecast or projection or assumption. Investors still don't know if, when that manufacturing facility, when that production facility comes online, if it's actually going to help bring down these losses. And this is not just the most recent quarter, but all year long, that's been the case here. They generated 44 and 47 million in the 9 months ended September 30th, and it cost them 157 million and 177 million to make those 44 million and 47 million in sales. So you might say, why doesn't Plug Power raise the prices so that it balances with what it costs them to procure this energy? That would be a reasonable assumption, right? But if they were to do that, their revenue would fall significantly because their clients would say, no, thank you. At those prices, we don't want that. And their revenue, their growth, because they've been selling themselves as this massively growing, quickly growing company, that growth will diminish. And that story they tell investors will no longer suffice, because maybe they'll be break even, maybe not. But at the same time, they will not be growing, and they'll be significantly smaller than where they are now. So yeah, it's, as you might understand, the picture you're getting here, they're not in a good position. They're really not. So let's look longer term. So as I mentioned, they've been selling themselves as a growth company, and they have been generating growth, right? Revenue has increased from let's say a couple of million all the way up to 889 million as they've ramped up their business. But they're losing a lot of money, right? I showed you that the reason they're growing is because they're selling that product at a lower price than what they're paying for it. It would be like if I go to the Apple store and get a brand new iPhone, still in the case, right? What is the retail price on that? Like 700? And then I bring it to you and I sell it to you for $200. A brand new Apple iPhone that Apple themselves are selling for 700. Of course, I'm going to get some sales because I'm selling something that's worth 700 for just 200. I'll be losing a lot of money, but I'll be making sales, and that's really what's happening here. So you can see the operating profit losses just heading in the wrong direction. They've just been losing a lot of money, and very quickly. Negative 92%, 88% negative, and then falling negative 99%, and little improvement over the years in their losses in this metric. And if you look at cash flow from operations in the trailing 12 months, it's an even worse story. They've been losing a lot of money on the bottom line. And then during the pandemic, when these alternative energy companies were wildly in favor, Plug Power stock soared by thousands of percentage points, and they capitalized on that by selling shares and raising billions of dollars in cash. And they've proceeded to burn through that capital because they had more money. And so if you're already losing money and they give you more money to lose, usually that's a bad equation. And that's been the case for Plug Power. Their losses accelerated. Now they lost in the most recent trailing 12 months $1.17 billion. Thankfully, they don't have too much long-term debt, just 198 million in long-term debt, and they still have $567 million in cash and short-term investments. But you could see at the rate that they're burning through cash, this 567 million will not last very long if they continue burning through cash at the rate they have been. So finally, I want to look at valuation, and the stock is trading at a forward price to sales of 1.326, which is significantly cheaper than the forward price to sales of over 45 it was selling for around January of 2021. But remember, 2021, like I mentioned, was a frenzy. Investors were just throwing their money at any investment that talked about any prospects of growth and potential and hope, really. And unfortunately, that hasn't played out. And I was telling investors that the stock is definitely not a buy at these levels. It was extremely risky. And even at these levels, at a forward price to sales of 1.326, I would say that Plug Power stock is not a buy for 2024. Plug Power stock, in my opinion, has put itself in a position where it needs to prove itself before I would give it another dollar of my money. Okay, it needs to prove itself. It needs to get that Georgia manufacturing plant up. It needs to start production, and it needs to demonstrate improvement in profitability. And before it does those things, I would not give Plug Power stock another dollar of my money. They've already got enough money from investors. They need to demonstrate that they can use that money effectively before investors should give them another dollar of their money. And again, that's just my opinion. If Plug Power stock does get things right, there is potential for the company, for the stock price to improve if they get things right. But they have to get things right, which they haven't been able to do up until this point. So I would say it's not a buy for 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.